Good morning, Dimacharani Abudi. My name is Ulisani Ravele, Head of Projects at I'm an Entrepreneur. Welcome to yet another exciting edition of our Digital Summit in association with FNB. As you know, today we're talking about raising capital for recovery and growth, and I am sure you cannot wait to dive straight in. But before we kick things off, a few house rules. If you're joining us via our Zoom webinar, please be sure to make use of the comment section to let us know your thoughts, any comments you may have when our experts are speaking. The comment section will be open throughout the summit. Then, if you would like to put forward any questions to our experts, use the Q&A box at the bottom. And when it comes to the live Q&A session with our experts, we will be sure to put those questions forward. Questions, Q&A box, not comment section, Q&A box, sharp. Then we're also going to have some polls that are running throughout the morning. So those will pop up on your screen. To make them disappear from your screen, all you need to do is give us a response and then it will go away. All right, if you're joining us on our website via our data-free stream, good morning and welcome to you too as well. You can use our WhatsApp line for any questions and comments that you have throughout the morning. That number is 078 350 0768. The number will also stay on your screen throughout the summit. That's it for me. Over to Andile. Enjoy the summit. This summit is brought to you by I Am an Entrepreneur in association with FNB and our partners.
Hey, does your bank give you a guide on how to run your business?
Yep, it's on Fundaba, which puts all I can learn about business right here.
Fun what?
Fundaba. It's proper help on how to run my business. It's free on my FNB app, so I can learn on the go.
Oh, like little tips?
I wouldn't call learning how to get my pricing right to turn profits in 1 year, that's all.
What's the catch?
No catch. They just want my business to do well.
That's really something. Does your bank put a business coach in your hand?
Mine does.
Good morning, ladies and gentlemen, and welcome to yet another installment of our I'm an Entrepreneur Digital Summit, of course, brought to you by FNB. It is so nice to see you all adding on and joining the participants list. I can see you on our Zoom platform. Special welcome also to everybody that's joining us on our data-free line. Nobody gets left behind, and that's exactly what we are doing here at I'm an Entrepreneur, is making sure you have all the information you need to help your business grow. Thank you for everybody that's joined us. As you know, the rules are pretty simple. As Ulisani said, I just want to remind you that the question and answer feature is the place for you to go and throw your questions, because what we will be doing this morning is we'll be having all of the presentations back to back, and then we'll have the entire panel take all your questions. And that is before we go straight into our guest entrepreneur later on, Mr. Tubisang Khabosele, who obviously comes from APM, the bus company that he started. He's going to be telling us his own journey around this big theme that brings us all together today, funding. If there's one thing all of you, and I'm sure bar none, always complain about is how is it that we can't access the funding? Well, we're in those times now where government and the private sector have come to the party in availing funds. But you may have heard in the news that a lot of the banks, all the banks in fact, are struggling to deploy this money. Why? Because they need to keep up with the requirements of lending for banks. Well, what does that mean? What's the point of making money available if entrepreneurs like you and I can't access it? And what other sources are there that one can go and access? Is it just bank funding? What about ESD? What about venture capital? What about private equity? What about equity? So from anybody else that will come and put money into your business. So that's the reason we are here today. We're going to look at commercial funding. Precious from FNB will be taking us through the pros and cons, the reasons why bank lend, how they lend, why they look for what they look for. That's a particular type of funding. And then ESD funding. Kitu is here to talk up to us about ESD funding. Investor capital, the ladies from Scenario Capital are here to talk to us. That's Sam and Mushmi. And of course, Tumisangu Shea, his own journey. And it's not been an easy journey for him, as you can imagine. He runs a bus business, right? So he needs capital to buy the equipment, and then he needs capital to actually run the operation until he hits break even or profitability. Then there was COVID-19. He's probably had to go back again to the markets to go and find this capital that we all so desperately love. So that is what we are here to talk about today. You may not even know what kind of capital you need. We're going to be finding out from you where you are at in your own mind and in your own business. Right. Let me also thank all our other partners, of course, FNB, for being our headline partner, for making sure that this is possible. Thank you so much, you guys, especially for making sure that many other people from other parts of the country and even the world who cannot afford to be able to be streaming this 2-hour show, they're able to do that on a data-free line, which you guys are paying for. So thank you so much for that. Paulo World, thank you. Shivas, thank you very much. My good friends at Coca-Cola Beverages, thank you so, so much. Gauteng Tourism, Limpopo Tourism, and I'm told that Eastern Cape Tourism is joining us for the next one as well. Thank you guys for making sure that the tourism entrepreneurs are supported by being part of this platform. Google, Reno, thank you so much for driving us around. We're back to driving again, so thank you for all the support you're giving us. SIFA, the Small Enterprise Finance Agency, Shell, as well as our good folks at ShopRite. All the entrepreneurs that come from any of these companies that are joining us, you guys are most welcome, and thank you for your companies for making it possible for you guys to be here. As already indicated, we have extended our show by an extra half an hour, and that is to allow you guys to be able to ask a lot more questions. We found from the previous webinars and summits that a lot of times things feel rushed and you guys don't get an opportunity to ask. So we're making sure that that's the case today. So you're welcome to throw your questions. They will find their way to our panelists. Now, if you are joining us via the website, which is the free stream, you can still interact because obviously you don't have the chat platform there. You can still interact with us on our WhatsApp line. It's a very busy WhatsApp line, I can tell you. The number is 078-3500-768. 078-3500-768. I'm sure the team will also put it in the chat to make sure that you guys can also tell anybody else if you are on Zoom if they're looking for that number. 078-3500-768. Make sure you write that down. Send through your questions. I will equally take those questions from my handset into the panelists as well. We got a competition running on our social media everywhere, including Twitter, including Facebook, including Instagram. We are on hashtag IAAE Digital Summit, hashtag IAAE Digital Summit, and anybody that is the biggest sharer of the information that they're learning using our hashtag in any of their chosen platforms will win themselves this book. Now, this book is called Searching Through Dustbins, an authentic account of the birth of a business by a young man called Abed Tao. Now, Abed is a boy from Limpopo, he's a chartered accountant, and he decided to travel the road less traveled and started his own business, in fact, with his wife. And he's built a business, a few businesses, in fact, a property portfolio, an accounting firm, and a technology portfolio of businesses that has been able to get even real investment for those businesses. So he'd be actually a great person to help you through this theme of funding. That is why we are giving away this book. So please make sure that you share as much as you can on your social media platforms as you're learning in the next 2 hours or so, using the hashtag IAAE Digital Summit. And the most active person will win themselves this book, which we will deliver. We might even throw in a couple of other goodies as well. So make sure that you guys participate as much as you can. Right, now, without wasting any more time, let's head to our first poll. And this one is an important one. My team feels very strongly about hearing where you guys are at. It's coming up on your screen, and I'd love you to participate. The question is, what kind of capital is your business currently in need of? What kind of capital is your business currently in need of? Debt capital, for example, a loan or an overdraft. Equity capital, which would be equity from an investor who is likely to take more shares in your business. Is that what you need right now? A grant, which is essentially mostly government driven, where you will essentially just get money that you don't have to pay back that will go into your business towards some kind of socio-economic benefit, that's job creation or anything else of the sort. Or maybe number 4, you just don't know yet. All you know is that you need money. That's okay. You can click on that one if that's how you're feeling. Don't feel bad about it. That's why you're here, to understand all these different things so that you can decide. So please pick the one that's most applicable to you. I'll give you another 10 seconds to do so that you can tell us whether you think right now you need debt, you need equity, or you need a grant, or actually you have no idea what the type of capital you need. All you know is that you need the money. All right, let's find out what the poll is saying. What are the results of the poll are right now, so that we can move on with the show and find out where your headspace is. All right, so make sure you click on the correct one and the team will bring up the results in a moment. Coming up after all of this, we'll be kicking off with the FNB Commercial Business Manager, Precious Majola, who will be telling us more about commercial funding. Let's see the results of the poll. All right, it looks like quite an even split, eh? Very interesting. 21% think they need debt, 24% believe they need equity. 35% believe they need a grant, well, because you don't want to pay the money back, you smart one. And then 20% of you actually just don't know, all right? All you know is that you need some capital. All right, we're gonna be asking a similar question after everybody has spoken and has taught us the different types of capital and the things that we need to do to make sure we are ready for them and how we can make sure we can attract that kind of funding, all right? So we'll ask this one a little bit later on in the show, but thank you for sharing that information. Right, our first speaker, as I already said, Precious Majola. She's the FNB Commercial Business Manager, and she'll be talking to us about how commercial banks look at your business before making the decision to lend you the money. What kind of funding options are available to you? What funding you should be raising for what problem? So if you want to buy equipment, where should you be going? If you want to fund your operating expenses, where should you be going? And factors that impact the decision for them to fund or not, especially in these times where government and the banks are working hard to try and get money into us as small businesses. The question is, what is it that they're looking for? And hopefully Precious will also be able to share with us the challenges that they have on their side and what we can do to make it easier for them to lend us money. Throw your questions into the Q&A box, like I've already said. That's for the guys on Zoom. If you're joining us on a data-free, WhatsApp me, 078 3500 768, 078 3500 768. After this short break, Precious.
Ready?
You didn't have to drive here.
Arrive prepared in the all-new Renault Triber. Space for everything. Renault, most fuel-efficient brand in SA.
Hey, does your bank give you a guide on how to run your business?
Yep, it's on Fundaba, which puts all I can learn about business right here.
Fun what?
Fundaba. It's proper help on how to run my business. It's free on my FNB app, so I can learn on the go.
Oh, like little tips.
I wouldn't call learning how to get my pricing right to turn profits in 1 year, little.
What's the catch?
No catch. They just want my business to do well.
That's really something. Does your bank put a business coach in your hand?
Mine does.
Good morning, everyone, and thank you for taking the time to be part of this webinar. And thank you, Andile, for that kind introduction. My role today is to answer that one big question that lingers at the back of every entrepreneur's mind as to how can I apply and qualify for credit with my bank. Today, I also hope to demystify this misconception that banks have a lot of money, but have this tendency of not wanting to lend it out. Quite frankly, banks do not have a lot of money. What they do have is the ability to create credit. Commercial banks, by nature, play a huge role, not only in the financial system in terms of facilitating payments, but also in the economy at large as creators of credit. By the authority granted to them, banks are able to accept deposits from the individuals or businesses that have excess or surplus funds and extend same in a form of loans or overdraft to those that do not have enough money, be it for consumption on a personal capacity or for business use. Banks have an obligation to the depositor in terms of ensuring that they pay them interest for their investments and also of ensuring that they keep their monies safe. And similarly to the borrower, they need to ensure that they fairly assess that credit application as the borrower will be paying interest for that. So as you can see, banks have a huge responsibility, and this calls for very strict governance and very strict credit policies for when they do conduct or facilitate these transactions. And this is basically aimed at protecting all parties and also protecting the economy at large. What is also crucial to remember is that commercial banks are not the only source of finance or credit. Apart from the normal facilities that commercial banks do offer, there are other means of obtaining loans or funding, be it from friends and families or other state-owned institutions. And I think that's where the difference between funding and lending comes in. But my fellow panelists will obviously be covering that as we go along. And it is important to note that this difference mainly exists because of the different stages of the business life cycle. In the business space, the deficit units that commercial banks deal with are businesses, and businesses go through different stages, and at each stage, it represents a different type of funding that is suitable or required. This is purely because at each stage, the business and the stage relevant lender has different risks, has different opportunities, and because of that, lenders at each different stage will apply different assessments and have different expectation in terms of their expectations on their return on investments. So if you were to look at a traditional type of SME, say at a startup phase, which could be anything from 0 to 6 months, and generally at this phase or at this stage, banks are not able to play so much in that space, purely because of the inherent risk and also because there is not much history for the bank to make an informed lending decision. So here, the business generally relies on the founder or the business owner themselves from their own savings or from family and friends or other government institutions. And obviously, as the business grows into the growth stage and so on, and is able to exhibit some form of history and conduct, banks are then able to come in with the various financing facilities, which could range from anything from loans to overdraft and so on. So moving right along into answering the very big question as to how do banks decide if they will lend to you and your business? Basically, the first thing that we look at is history of both the personal and the business. We look at, does the business indeed have a business account, and is there constant movement of funds in and out of the account? And this is generally termed bank turnover. We also look at the fact of, do you pay your bills on time? So your payment history will be able to tell us that. And we check if there's any bouncing debit orders, and this will weigh in very much in terms of the credit application or the credit assessment. We also look for judgments on record. Here, we are checking if any of your creditors have listed you as a slow or a bad payer. Obviously, because the business does not run itself, it is ran by the individual. We also tap into the conduct and the history of the individual themselves, whereby we check the personal history conduct and the way that they conduct their affairs on their personal capacity. The other thing that we look at is affordability, which basically talks to the free cash that is generated by the business, which is what will ultimately repay the debt. So the flow of funds in and out of the account, the banks are then able to make an informed decision. Hence, we cannot play in that startup phase because the consistency at that stage is not yet solid. Another thing that we do look at is security or collateral. By definition, collateral means anything that is offered as security for repayment of the loan in an event of a default, right? It is one instrument that the bank uses to minimize the lending risk. So what does that mean for you? The lesser the risk for the bank, the lesser you will pay in terms of interest. But what is crucial to remember that collateral or security is not the primary source of repayment. That flow of funds and that free generated cash is what is considered as the primary source of repayment. The security does obviously play that sweetening role in terms of it shows that you are committed, and for the bank or for the commercial bank, it shows some form of comfort. So to summarize, I would like you to remember the acronym HAS. H for history, A for affordability, and S for security. Obviously, in the small business space, security is not always compulsory, but as I mentioned, it plays that sweetening role. Where most businesses normally go wrong in terms of their thinking and behavior is what I've already alluded to in terms of record keeping, by not having enough record for their businesses, and keeping a clean credit history, and ensuring that there is consistent money flowing in and out of your account. And also where most entrepreneurs go wrong is not separating the personal and their business affairs. So ultimately, record keeping, clean record keeping for that matter, is the ticket to the game. Another question to address is which loans make sense for my business? Now, this is a question that you as an entrepreneur or the business owner must have asked and answered in terms of what loan and how much you're needing from the bank. As I've mentioned earlier, that the business goes through different stages in their business life cycle. So different facilities will be applicable at each different stage. So commercial banks have different types of facilities as well to cater for each different need. Generally, we have business revolving loans, which are for your unexpected day-to-day expenses. We have business loans. Those are more generally for your expansion and growth and acquiring of assets as well. Reason why I say for acquiring of assets as well, because you do find that there are some assets that the normal financing houses like WesBank are not able to consider, probably because of the age of the assets or the type of the asset. And you have the likes of your asset-based finance, which is to acquire movable assets. You have your commercial property finance, and you have your overdrafts, which are for financing your working capital. Credit cards are there to assist with your day-to-day expenses, and purchase order financing, which is one I'd like to dwell a bit on. Due to banks being highly regulated, there are other loans that we're not able to extend, right? So in partnership with other institutions that are then mandated to attend to those short-term contracts for SMEs, the banks, or FNB in particular, is then able to solution for the business who has acquired a valid contract and is in possession of a valid purchase order, but obviously does not have the necessary funds to carry on that transaction. So provided that your debtor is a blue chip company or a reputable government department, banks are then able to facilitate that transaction via those partners or those institutions. And selective invoice discounting, this is obviously in a case where you have attended in terms of the contract terms, but now are awaiting that 60 or 90-day term in terms of receiving your payment. The banks is then able to come in and discount that invoice for you. The last question to look at is, should you have known, or should there be another crisis coming, what would you have done differently in terms of your business, in terms of ensuring that you're in a better position? This is one question that I'd like to leave you with, but already has been covered in my presentation. The one finding, or the most important finding, is that record keeping tends to be the one thing that we fall short on. So with that being identified as shortfall from the small businesses, F&B has designed products and services that are aimed at addressing those concerns or those findings rather. We have what we call CIPC registration, which talks to your record keeping. So here you are able to register your business, and within 2 days, you are able to obtain your registration documents. We have First Business Zero accounts, which is the first business account that doesn't charge you monthly account fees. And that is aimed obviously at sole proprietors. And we have what we also call instant solutions, which includes instant invoicing, instant payroll, and instant accounting. And this is all offered to you for free. We also have what we call speedy merchant or QR payment receipts, which is just another way that you can receive payments from your clients other than cash. We have business eBucks, which is our reward system, whereby every time you do certain transactions, the bank is able to reward you accordingly. So this is a way that we are putting money back in your pocket. And lastly, in the spirit of #RealHelp, to assist businesses to navigate these hard times, F&B has put in a series of webinars and other contextual advice available both on the F&B website and the F&B app via the Business Hub. And this includes the Business Talk, it includes the Business Toolkit, and Fundab. Business Talk basically consists of up-to-date information from industry experts and F&B specialists. Business Toolkit is a leadership toolkit that is designed to assist and guide the entrepreneur in terms of crisis management. And we have Fundab, which is a multilingual business tool that helps entrepreneurs through their business journey, from the time that they start, run, and grow their business. This is a really awesome tool that has very insightful guidance from the time you start thinking of starting that business in terms of addressing the most important questions if your idea is indeed viable. It guides you in terms of assessing the industry or the sector that you want to operate in, and helps you or guides you into formulating your business plan. Basically deals with everything that is business journey related. We call it the business mentor in your pocket. So please do join the millions of F&B and non-F&B clients that are already enjoying the benefits of this tool. Thank you.
This summit is brought to you by I Am an Entrepreneur in association with FNB and our partners.
Thank you very much to you, Precious, for that. Much appreciated. Yes, lots of us, a lot of information for us to think through and process. Don't forget, throw your Q&As. I see a lot of questions already coming on the Zoom platform. I also see a lot of questions coming through on WhatsApp. That number again, just to make sure that you're sending your WhatsApp to the right number, 078-3500-768. That's the number to send your WhatsApp questions through to us. We're going to be getting all the questions a little bit later on, asking about that history, affordability, security, HAS, and many other things about what banks fund. I also like the point that Precious raised about the fact that the biggest issue is actually record keeping. We are not keeping our records accurate, which makes it difficult for funders to fund us. But we got to move on. ESD funding, what is that? Enterprise and Supply Development. You may have heard the term thrown around, but you may not even know that there is funding for you waiting on the other side from South African corporates who are willing to play their part in supporting entrepreneurship. Keitumetse Likaba, SME and funding specialist at Tyson's Capital Group, is going to take us through it. Over to you, Kitu.
We can help you pay staff without using cash. Send money via e-wallet or pay using EFT payments with the FNB app or online banking for business. FNB, how can we help you?
Good morning, everybody, colleagues, entrepreneurs, SMMEs. My name is Kitumetse Ligaba, and welcome to our Digital Summit. I will be presenting to you and speaking about enterprise and supply development today. what is enterprise and supply development, the purpose of enterprise and supply development, how you can access some of those funds, the different types of funds that we have under enterprise and supply development, and then we will move on to a section where you would be able to ask questions. So save your questions for me for later. Again, my name is Kitumetse Ligaba. I'm an accountant by profession, but my passion lies in SMME development. So I am now an SMME funding and development specialist. I work with SMME in helping them become sustainable, developing SMME to participate in our greater economy, and as well as helping them scale through different types of funding, specifically ESD, which is what I will be speaking to you about today. What is ESD and where does it come from? I think a lot of SMMEs or a lot of entrepreneurs don't have an idea or don't quite know where the concept of ESD comes from. The word is thrown quite loosely in business, in funding practices, and in corporate. So ESD comes from the BE codes of good practice. So when the DTI and the BE Commissioner introduced BE in the greater scheme, they distinguished between 3 types of companies in the country. The first being a generic company, which is companies that have a turnover, a revenue of more than 50 million Rand a year. And then we have what we call QSEs, which is our qualifying supplier enterprises. These are enterprises that make between 10 million and 50 million Rand per year in revenues. And lastly, we have EMEs, which are our exempt micro enterprises, which is where most SMMEs and entrepreneurs fall into. With BE, the generic companies cannot use the normal affidavit that SMMEs use in doing their BE scores. And this is where the 5 pillars of the BE scorecard comes in. So if a company or a corporate company is making over 50 million Rand turnovers in a year, they have to use the BE pillars of the scorecard to calculate their BE score. And this is where enterprise and supply development comes from. In the 5 pillars, the total score that they can have is 100, made up from ownership, management control, skills development, socioeconomic development, and lastly, enterprise and supply development. In the enterprise and supply development, the corporates are required to spend 3% of their net profit after tax on QSEs and EMEs, which are the SMMEs in the country. And that is where enterprise and supply development funding comes from. And with this enterprise and supply development, it is split into 2 categories: enterprise development and supply development. Supplier development is where an SMME is already procuring for a specific corporate. So for example, if you are already a supplier of F&B, for example, then they would be able to help you under their supplier development program. If you have no contract with F&B or you have never done any work with F&B, then F&B would be able to assist you as an SMME under enterprise development program, because you are not a vendor for them and you have not supplied anything for them in the past. So the percentage, the 3%, is split between the enterprise and the suppliers of the different corporates. I'm going to move on to my next slide, which is the purpose of the enterprise and supply development. I've touched on it a little bit in the previous slide, but the purpose of enterprise and supply development is 1, promoting economic transformation in the country. So we are trying, or ESD is trying to promote the participation of Black-owned enterprises in our greater economy. Secondly, ESD tries to create competitive markets. Historically and previously, Black businesses or Black-owned businesses have always operated at a very small scale and have never been able to compete with bigger businesses in the country. So what ESD tries to do, we try and develop, fund enterprises, small enterprises, to become compliant, so the company and your company can become a good citizen of the country in terms of tax, CRPC, and whatever other legislation that the company needs to be compliant with. And then we try and make the SMMEs and the Black-owned businesses technically competent. So we want businesses to be able to produce the right products at the right price. Good quality products that can also compete in the market with bigger corporates that are already in the market competing. And lastly, we want our SMMEs to be commercially competent. So we try and assist through ESD SMMEs to have well-entrenched operational systems that can work so that the business can work like a well-oiled machine, and the enterprises are not reliant on a singular person or are not reliant on specific people to keep it going, but the business is a going concern and can be well entrenched with proper systems to be sustainable and continue into the foreseeable future and forever and forever and forever. And lastly, we have ESD for job creation and to create sustainable communities. In job creation, we've always heard creating one job feeds probably about average 10 people. So ESD, the whole purpose of ESD, if you do get assistance through an ESD program, then we want to see the business growing jobs. We want to see the business participating more in the economy, increasing economic participation. And we also want to see the business growing in revenues and essentially, and again, in profits. So that is what the purpose of ESD is. And I think for a lot of people, it's really not a tick box exercise. It is the purpose, the main and sole purpose of ESD is development so that we can have economic transformation in the country. Firstly, you can benefit through ESD in the form of a grant. A grant is given to your enterprise or your company, and it's money or donations that you do not have to repay back to the corporate. It can come in the form of loans, different types of loans. Some companies, I've seen a lot of corporates that give out interest-free loans, which really helps the SMMEs with cash flow, as you don't have the burden of interest on the loan and the burden of paying back the loan with additional interest. And then we have soft loans and interest-bearing loans. I mean, depending on each corporate structure, the ESD programs give different types of interests in their ESD programs. So some companies will give you a prime minus loan. Some companies will give you a loan at prime. And depending on the company structure, they will be able to tell you exactly what the loan bearing or the loan terms of the program is. Thirdly, we see this quite a lot in the market. You can have ESD training support, where SMMEs are supported in the form of training, either training of the entrepreneur and management of the SMMEs themselves, training of staff, business training, which could involve quite a lot of things, financial management training, tax compliance training, HR compliance training, any other technical training that the company might need, depending on the industry and the type of business that it runs. And we can also have, quite popularly, because of the pandemic now, we've seen a lot of people spend money to enable SMMEs in ICT and technology training, which has become quite popular because of what we've seen happen in the previous 4 months of the pandemic and how it has changed the landscape of SMMEs. And then corporates can also decide to support and develop SMMEs through office support, So they can decide to offer you free rental space to come and work in. They can offer to give you free bookkeeping services. They can offer to give you free receptionist services, administration services. So any office support that might help the SMME in capacitating the SMME, the corporate can also decide to give SMME support in that direction. And then lastly, we can decide to give SMME support in terms of management support, board sittings of the SMME, just from a very high level of support, especially with management, giving them the right tools to be able to put together strategies, business plans, and ensure the implementation of such is also done correctly throughout the business. So it's not one-sided. It's not only one support that you can receive from ESD. It depends on the different corporate that you are dealing with, what support they are willing to give, or what support they have in their strategy to give to each SMME. How do we access these ESD funds, and how do you know which corporate actually has ESD programs that they are running, and which corporate is giving out support, whether monetary or non-financial support, to SMME? Firstly, I think probably the best place to start is probably Google, which is always your number one, to go and find out from peers, find out from LinkedIn, find out from business networks, which companies in the country have ESD programs. And it's quite a lot of them. I mean, the list is so exhaustive. There's mining companies, banks, financial services companies, petroleum companies. Most corporates have ESD programs. What will be different, obviously, depending on each corporate's budget, will be the amount that is available to spend on the SMMEs in a particular year. So before you even go and search for these ESD programs, I think the most important thing, or firstly what companies or what SMMEs like to do, they blanket search for funding, especially when it comes to ESD. But you have to first know what your own funding strategy is. So know what industries your company or your SMME is, where is your SMME going, what type of corporates would benefit you specifically from, even from a procurement perspective, which we will come back to, and which corporate is your best fit, because you also want to be funded, or you ideally want to be in a relationship with a corporate where you can benefit beyond the funding, but you can also have other benefits, i.e. contracts, RFQs, whatever it may be. So try and look for corporates that match your company and where there is opportunity for you to have long-term benefits. So find out, when you are searching for entities that are doing ESD programs, find out what the entity's strategy is. What type of SMMEs is the specific entity supporting? I do a lot of ESD programs in the mining sector, and obviously they have a preference of the type of SMMEs that they want to support, whether it's in manufacturing, engineering, renewable energy. So if you are in a different industry, you wouldn't want to go and apply because you would be an automatic reject. So you also just need to be careful that you're not wasting time applying for funds or applying for ESD funds that are not applicable to your SMME. So very, very important. Look for ESD programs that actually do support and develop companies that are in the industry that you are involved in. Secondly, find out what type of fund loans that the corporate is actually giving out to different SMMEs. So SMMEs often look for certain things. You look for working capital, you look for rent money. Some SMMEs are looking for asset financing. Some SMMEs are actually looking for equity. And then you have SMMEs looking to settle existing debt. So before you even apply for these ESD funds, find out that your funding need is catered for in that specific ESD program, because the funding strategies are also different. So if you are going to go to an F&B, for instance, make sure that F&B actually funds what you want funded. If it's assets that you're looking for, make sure and ask. There's always an ESD team, an ESD manager, an implementation team of the ESD that you can ask. Do you guys fund moving vehicles? I need a delivery vehicle for my company. Yes. If it's a no, then you move to the next company and ask. And a lot of the companies I know, it's very frustrating for SMMEs because a lot of the companies are not funding working capital. So they're not funding things like salaries, things like rent. So you go through all your work to only get a no in the end, because you haven't inquired about the types of funds that they're willing to give. So find out what type of funding they're willing to give you, be it asset financing, be it working capital, be it debt settlement, whatever it is, find out before you are even rejected. Secondly, find out that the amount is within the ESD budget. SMMEs always look, some budgets will only say we're only funding SMMEs looking for amounts from 100,000 to 10 million Rand. And if you are looking for 50,000 Rand, then you are outside of that reach, or you are outside of what they are looking to fund. So always make sure that the amount of money that you are looking for when you're applying for the ESD funding is actually what the ESD company is willing, or the ESD program is willing to give to your company. 4, find out about grants, because you do have some ESD companies that give out grants, which is monies you don't have to pay back. They obviously come with certain conditions to it, but it is always better to just find out, are there any grants available in this program for my entity, and what type of SMMEs qualify for grant funding. Then you can apply for the grant funding, because what sometimes does happen that we give ESD funding in a combination of a loan and a grant, depending on the type of entity and the requirement of funding and what the funding will be used for. 4th, job creation. You need, when you are funded, especially through ESD, they want to see the benefit through job creation and through economic participation. So when you are looking for this funding, you have to specifically specify, how is this funding going to help me create jobs? You have to, when you are looking for ESD funding, or when you are trying to get ESD funding, you have to specify how many jobs that funding is going to help create. Because remember, the whole point of ESD funding is development, and the development has to go beyond the entrepreneur and the SMME. It has to benefit the greater community. And then we have procurement opportunities. So in the companies that you are looking for ESD funding from, make sure that you are able to also have procurement opportunities in the business. If you're not already a supplier of the company, as I had explained, it's enterprise development and supply development. You have to aim to move from enterprise development into supply chain development. Because if you are in a manufacturing company, ideally you want to go to a manufacturing corporate and ask them for funding, because they also, in the end, the benefit is a win-win. They're developing you to be able to service them in the end. So it becomes a win-win situation, where it's not a one-sided situation where it's a donation to the SMME and we never see the SMME again. Also, it helps you grow your revenues, it helps you grow your turnovers, it helps you grow your profits, and it also helps you with your job creation. Lastly, just make sure of the geographical reach, because a lot of ESD funds have preference for certain areas in the country, be it rural areas, peri-urban areas. So just make sure that your business is operating in the area that is preferred by the corporate before you even go and apply. So consider all those things before you go and apply for ESD funding, and make sure that you are within the strategy of the ESD programs that you are trying to apply for before you even apply, so that you don't waste your time, because it frustrates both the SMME and the corporate looking at the applications. What is your company profile? What do you do? I think I've seen a lot of SMME that miss in the first paragraph, in the first page of their business plan, of their funding application, to explain to us, who are you and what do you do? Your profile becomes your introduction and your profile becomes very important before you even say what type of funding you want to do. And we go through, in a month, I will go through more than 50, more than 100 funding applications. So you can imagine I even sometimes skim through it. So if your first page does not have the right information, you are already on the back foot of the funding application. So please, 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 make sure in the first page of your funding application, you clearly state who and what your company is. Don't start with your SWOT analysis, please, please. Okay, so once you've told us who you are, my name is Gidumete and I sell pens. Okay, great. What do you want? What funding are you looking for? I currently sell these pens from buying them at Game, or I buy them at Macro and sell, but now I want to make my own pens, so I'm looking for funding to buy a machine to make pens. See, already there's a flow, there's a process. Okay, she sells pens. She's currently buying ready-made pens, but she's made research and found out that the pens can actually be manufactured by herself, so she needs a machine to manufacture. Great. I need 2 million rand to buy this machine. Also, I can't tell you how much you need in your business. You have to come and tell me how much you need in your business, because you know your business more than anyone else. So what do you want? You have to be very explicit in what you want. I have an RFQ. I am looking to spend 50,000 Rand in preparing for this RFQ. I don't have the money. Please, can I have a bridging finance of 50,000 Rand and I will pay you when my RFQ pays? You see, that's a clear picture of what you are looking for, which is what a lot of people miss. So I think very, very important for SMMEs. Make the picture clear and keep it simple. Keep it very simple. Where currently is your product? Where are you selling your product? Where is your revenues coming from? Do you have contracts in place? Especially for ESD funding that is coming through as loans to SMMEs. Important, important, important. How are you going to pay me back? Do you have a fixed contract that's paying you fixed amounts of money every month? Do you have offtake agreements that have promised, should you get this machine, I will buy these many pens from you? Do you have letters of intent from your customers to say, if this product is available, I will definitely buy the product from you? A lot of SMMEs miss that step, where in the funding process, I want to know, especially if I'm giving you a loan, how are you going to pay me back? You have to tell me, you either have a fixed contract, which is giving you fixed amounts of monies every month. That is how you're going to make your money and pay me back. You have offtake agreements that will take off once the product is available. You have letters of intent that have been signed that will only take place once the product is in place. But you can't come to me and tell me you want ESD funding in the form of a loan or a grant, but you yourself have not worked on your own business sustainability. How am I going to make sure that I have enough money each month to pay back this money? Even if you don't have to pay back the money, even if the ESD gave you a grant, how are you going to make sure your business remains a going concern and sustainable in the foreseeable future? Because no one wants to give you a grant today, 6 months later, the company is not operating. So it is up to each SMME owner, each business owner, to prove your own going concern and sustainability in your own business. Because remember, it always comes down to those 3 things I spoke about. We want to see growth in jobs, we want to see growth in revenue and profits, and we also want to see growth in greater economic participation. Also tell us what you've achieved, the milestones that you've achieved in your business. And this can come through the form of financial statements and management accounts, which is also something that I know a lot of SMEs struggle with. But you have to show us what have you achieved and the trail of your business from the years that you've started to now. Even if you're selling 2, 4, 5 products, but show us that there is a constant increase of the product or the service that you are providing to the different to your markets. So I think with any other funding, ESD funding works the same. Tell us who you are, what you need the money for, how you are going to make sure that you're going to pay back the money, if you do have to pay back the money, and how are you going to make sure that beyond you receiving the funding, how is your business going to remain sustainable? And that, I think, ladies and gentlemen, I have probably said a mouthful on ESD. And I think for me, it boils down also, ESD and BE is not a tick box exercise. Everything evolves around the development of Black enterprises, and we want to see Black enterprises winning and participating in the greater markets of this country and the economy. So with BE, we really, what comes, a bigger part of it also comes a monitoring and evaluation, which is something that we do, because in getting or in being part of a ESD program, you know, they want to monitor the impact, because the impact is very important. So once you also have that funding, we want to monitor each quarter or each month, whatever the corporate strategy is, we want to monitor the impact of the funding on the different SMMEs. So that becomes very, very important. And this is also what helps us measure how effective ESD programs have worked in the country. So with that said, I will stop there and pause there, and I will take any other questions that come later on in the presentation.
This summit is brought to you by I Am an Entrepreneur in association with FNB and our partners.
Thank you so much, Ketu. Wow, that is indeed was a mouthful, but an important mouthful, because I think there's a lot of us who do not know or understand that corporates in South Africa, in pursuit of that 3%, in pursuit of those BE points, are doing this for us as entrepreneurs. So thank you very much, Ketu, for making sure that we get that. And we're going to get back to some of the questions that came up as a result of her presentation, particularly the facts behind how you can make sure that you get ahead and you get that ESD funding that's out there for you. Let's move on though, because there's another place where you can get good funding, and that's in the venture capital and private equity world. Now, these are the typical people that come and invest their capital in your business. They stay on as shareholders, they sit on your board, they help you with strategy, they help you scale the business, and we could not have found a better team to tell us what that world is looking for and how can we best position ourselves as entrepreneurs to get money from them than the ladies at Scenario Capital. So after the short break, over to you, Sam and Mushmi.
Reignite your passions in the new Renault Duster, awarded most fuel-efficient brand in SA.
Good morning, fellow entrepreneurs. My name is Sam and this is Moshmi. We are the and founders of Scenario Capital, a private equity firm that focuses on growth investments in the lower and mid-market. We're delighted to be with you here today to share with you some insights into what we look for and in approaching funding for companies just like yours. Now, it's important to note that there are very different types of investors. We're not going to be speaking for all investors, but we're here to talk a bit about what venture capital and private equity looks for in prospective investment. Let's talk a little bit while we're here about what the difference is between venture capital and private equity. So as a starting point, it's really important to note that we are institutional investors. What that means is we're a private equity manager or venture capital manager. We represent and invest on behalf of institutional capital. So that is often pension funds, asset management, and in some instances, high net worth offices and family offices. We are therefore responsible for delivering attractive and returns on a risk-adjusted basis, which means that we need to deliver a return on our invested capital which is commensurate with the risk that we have taken for those investments. So where do the similarities between venture capital start and end and private equity start and end? Well, some people debate and say that it's a spectrum and that it's the same, and certainly there are similarities across these different asset classes. Our investment processes are very similar, how we evaluate cash and valuation is very similar. But ultimately, there's also a lot of differences in terms of what we look at. And that can be something ranging from the failure rate or how involved we get with our portfolio companies, how we structure our investments, and so on and so forth. Ultimately, though, it's all about ownership. We are taking a stake in your business, an equity stake in your business. We are owners alongside you and looking to deliver exceptional outcomes together and taking risks together. Mosh.
Hi, everyone. So what this slide illustrates is the business growth phase. It's important to note that at each phase, your business has a different risk profile and will attract different investors. For example, at the seed stage, when you're developing your concept and at ideation, your funding sources usually comes from what we call the 3 Fs, which is family, friends, and fools. And as you develop out your product and have a minimum viable product, you start attracting angel funders. And once you've attracted your first customer and you develop a customer base, you start attracting venture capitalists who can tolerate market risk. And as you prove out your market risk and the business grows and starts scaling, you start to have implementation risk, and as we call it, execution risk. And this is where growth equity investors and private equity investors start looking at your business. When you want to raise capital, what is important to consider? So firstly, you really need to consider the purpose of your funding. Are you just selling out, buying in? Is it for BE, growth equity? And the timing of this funding is really important. We always say to companies looking for investors is to get to know your investors over a period of time. After all, you are partnering with them, and it is always advisable that you get to know your investors' long-term horizon and ensure that they are aligned with you and have the same aspirations and vision for your business. Value, how important is price to you? So if you're just selling your entire business, you may be looking for the highest price you can get out in the market and aren't considered about and do not consider any other sources. In terms of whether you are staying in, it's about the trade-off of the partner you get versus the price. And what's also very key is at what level do you dilute. So as we move through to market sizing, you'll notice one of the biggest points that investors look for is the market, particularly in the venture capital space. You'll hear words such as TAM, SAM, and SOM, which ultimately is about market sizing and how much of the market you can capture and the growth prospects in different markets. Profitability is not always key, especially in a growth phase investment. Investors don't need it to be profitable as long as your business has future growth potential and will be profitable in the foreseeable future. For example, in one of our investments, Snapped, if the business had to stand still, it would be inherently profitable. However, it is following a growth strategy to go globally, and we're investing in people and in IP. And so as it stands, they aren't profitable, but have a clear line of sight as to when they're going to become profitable. Usually investors also like businesses that have a niche focus in a niche market, which gives them a competitive edge. And your product has to be different in some shape or form in order to create a barrier of entry, which makes it difficult for competitors to replicate in a hurry. We call this a sustainable competitive advantage. And for example, this could be creating your own IP, which no one can replicate. It could be a cost advantage. For example, in Snap, they have a rand cost base and sell in dollars, whereas most of their competitors are based in the US and have a dollar cost base, and that's where they get their competitive edge. It could be years of experience in an industry. So in our Lightway investment management has over 30 years of experience and are able to innovate and develop much quicker than the competitors. And it could be something as simple as location. For example, in our EduLife investment, which is a schools business, it simply is where the schools are positioned and located close to their customers. Financials. Investors will always look and ask you for financials and management accounts. Investors also understand that SMEs may not have a sophisticated financial function. However, you should always present financials that are reliable and complete and demonstrate the company's performance. It is worth investing in accurate and reliable financials because it will result in the turnaround time of how quick an investor can invest in. So we have had an investment which didn't have very reliable financials, and it took us a year to build out those financials. Whereas when we work with more cleaner investments, the turnaround time is about 3 to 4 months. The other thing that investors look for is they like to invest and back management teams. Alignment of interest is key, and making sure that management also has a vested interest in the business and has money at risk and something material to lose. And we call this skin in the game. Experience is also important, and the question that investors will ask is, have you done this before? Do you have a proven track record? They look at the depth of the management team and the capability of the management team to scale this business and take it to the next level. One of the biggest risks for investors is key man dependency, is having the business reliant on one individual. And so it is important to build out the depth such that you're not reliant on a specific person. Governance, risk management, and processes and procedures are the core foundation blocks of your business, and it is worthwhile investing the time at an early stage to ensure that you have all of this in place. Without a solid foundation, any growth initiative will fall apart as you go along. So we have given you a long list of things that investors look for, but ultimately what it all comes down to is attractive price. Investors want to ensure that they're getting an attractive return for the price that they're paying. And so it's always a balancing act as to what is a reasonable valuation. We understand that entrepreneurs think that their business is worth way more than it actually is. And luckily for us, we understand this, and we have innovative structuring solutions to solve this gap. And the last point is really about start with the end in mind. Investors want to know what is the exit. It's about creating value such that the business is saleable over the investor's time horizon, which is usually around 5 to 7 years. So always have the end in mind.
Okay, so with that summary now presented, we wanted to share with you a couple of do's and don'ts. It's just so important that at the end of the day, when we're partnering with a management team, that there's great alignment around certain expectations. So let's share these. So the starting point is don't build yourself a prison. So Moshmi has already referred to this. It speaks very much to the key man dependency issues. And we often share an example. We were having a coffee meeting with a CEO and we said, we're going to spend the next 5 years making you redundant. You can imagine her expression. And I said, no, don't worry, I'm kidding. We do actually back management teams. But at the same time, the intention through this next 5 to 7 year journey is that we want to build the value in the business. That's how you build equity value. You need to build the value in the business so that when you get to, whether it's 5 years, 10 years, 20 years from now, you've built a business that you can actually separate yourself from. You build the option value. So we talk about building a business to be saleable, irrespective of whether you plan at this point to exit alongside your institutional investor at a time when they may want to do it. The second is do have courageous conversations. It is incredibly important when we find often that everyone's in this courting phase. You don't really want to have those difficult conversations. You may have views, well, I never ever want to sell to certain business. You want to say that up front. Oftentimes it's the private equity or venture capital investor who also doesn't want to lose the investment opportunity, doesn't talk about the expectations beforehand and has a view, we'll just cover that afterwards. And afterwards is not a good time to be doing it. It's much better to start with a clear set of alignment in expectations. Do set yourself up for success. This speaks very much to situations that we've experienced where a management team, an entrepreneur has overpromised what they can do in order to be able to attract a higher valuation. And in instances where you pay a very high price, you find yourself continuously pushing this ball up the hill. And that makes for a very pressurized situation, not only for the investor who's under pressure to deliver against their expectations that they've set for their investors, but also then for the management team who is consistently on the back foot. Do be prepared to transform. So this is an entire topic in itself. At Sonari, we have many experiences of entrepreneurs going back to the cave is what we call it. But it really speaks to, and certainly not calling any of our entrepreneurs Neanderthals or anything like that, but just really speaking to the fact that entrepreneurs who've built businesses, particularly businesses that are quite established, they have certain ways and customs and comfort zones that you need to be prepared to change. And it speaks to a change in mindset and a change in behaviors and how you're going to sustain those changes, particularly when the times get tough, as they usually do. Finally, do chart a roadmap to boring. This one often surprises people, particularly entrepreneurs of growth companies that think, well, how on earth or why on earth should I be planning to make my business boring? Well, boring is saleable. The good night's sleep is saleable. When your business runs properly, you are able to, again, separate yourself from that, and it becomes a business with much more inherent value. Of course, we're never going to leave it there. The example of this business, came up in our sensor networks business, which is an IoT for the insurance space business, and it's anything but boring. But the entrepreneur realized that in order to realize the eventual wealth creation event that he would like to see, that he needed to get the business to a much more sustainable stage where he would actually be able to hand it over. So these are the aspects of Sonari's 3S approach. We focus on sustainability, scalability, and saleability. We've got a number of interventions that we look at in both pre and post transaction. And then really just wrapping up, we speak about, what can go wrong. And there are many things that can go wrong, and some of them we've already alluded to. But I think that if I leave you with two things, first of all, just know that these processes often have misunderstandings, and particularly as an entrepreneur, if you're going through this process for the first time, you really should have an advisor, whether it's a paid-for advisor or someone you know who can help you, who's been through something like this before. It's really important because you're dealing with investors who do this on a daily basis, and so you need to position yourself well from that perspective. And then finally, get seasoned and realistic investors. As we all know, we're navigating a major crisis at the moment, and life happens, and you need investors who are along for that ride with you. So we'll take more questions in the Q&A section. Thank you.
This summit is brought to you by I Am an Entrepreneur in association with FNB and our partners.
Wow, thank you very much, ladies, for that. That was absolutely brilliant. I certainly enjoyed it, and I hope everybody else also did. Hey, lots to learn about the VCs and the private equity investors, hey? Tam, Sam, and Som. There's something I'm sure most of you guys did not even know what it was. And also learning that boring is good, hey? Sellable, get to sleep, you have a real business. And have the end in mind. Many entrepreneurs struggle with that one, hey? Because we build our businesses, we think we're gonna have it forever. These investors are coming for a period and look to exit at some point. So we have now had a presentation from a commercial bank, thanks to Precious from FNB. We've had a presentation from an ESD manager, thanks to Kitu. And we've also have a presentation from the VC and private equity guys, thanks to Mushmi and also Sam. We're gonna do the Q&A now. Ladies, thank you, welcome back. And gentlemen, I'm also joined by Grant Smith from FNB to help in the Q&A and in answering some of the questions. I'm gonna go straight into the questions that we've received over the WhatsApp line. And the first one really goes to FNB. So Precious and Grant, this is for you. I'm gonna read it out verbatim. It comes from Thomas in Valcom. He's tuning in on our data-free line in Valcom. And he is saying, with the current presentation, I still find the requirements to get assistance from FNB still cutting the majority of the disadvantaged out. Credit checks against us already disqualify the majority of us due to the high rate of unemployment that we face in our country. Is there no way that FNB can be soft on these based on history? And I guess he's talking about history of the country. Any takers? Grant, Precious?
Yeah, okay, Andila, I'll jump in there. So thank you for today, Andila. I think it's really needed for small business. So I really appreciate this, and thanks for giving us the chance to speak. I do understand the question. I suppose banks traditionally have had to look at individuals and businesses' conduct, and conduct can vary. I use the example, if someone speeds through a red robot, or someone drives up slowly and looks left and right and drives through a red robot, they're both breaking the law, but one's different to the other. So it really does come down to what that conduct is. And generally poor conduct or poor marks against your name can, within a couple of months be rectified. So it doesn't mean if you've had if you've done something poorly in the past, it's going to live with you forever. When it comes to businesses borrowing, the banks really just want to see that the business is a solid business. It's survived a couple of months. It's made some money. It looks like a profitable business, because invariably the business and the individual are intertwined, but the business is a separate legal entity. So I hope that's answered your question. I think, I hope I've given you a little bit of insight there.
I think you have, Grant. I think just to add, the nature of the banks, as Precious presented, is that they're lending people's deposits. It's not their money, they're lending people's deposits. They will look for making sure that, other than the history of the business, I think she gave us a few stats there. She gave us the has. She said history, afford, and security are important. So that's bank lending. It may be different with other people that may fund you, but that's the nature of bank lending.
Sorry, one thing, the history, affordability, security. The bank does lend without security up to about 1.5 million rand. So, sometimes people will say, well, we have to have security. That's actually not the case. The security can help further down the line, but it's not a prerequisite.
So what's the most important thing then, Grant? Affordability, I guess.
100% affordability. We can't lend to a business that we don't think can pay it back, because that's someone else's money that we're lending on. We have to do a proper due diligence. So thank you.
All right, cool. Thank you very much, Grant. Let me move on to you, Kitu. I got a question from Pretoria. Matlodi is asking you a few questions about ESD. I'm going to read them all out, so please make sure you keep up to date. Number one, is there any research on ESD activity in South Africa? And where can I go for that? 2, where could one search for active or publicly available ESD programs run by corporates? And 3, there are a few ESD service providers to corporates that I've come across, people like Raise Corp. Is there a list that one could find of similar companies? Over to you, Kidu.
Thank you so much. Let me jump straight into it. So in terms of the research, the best possible place to go is the SMME South Africa website. So what they have done, they've compiled a list of corporates that are offering ESD programs, including the type of industries that they are willing to support SMMEs with. So that answers number 1 and 2. So if you go to the SMME South Africa website, you'll be able to find that list, and that was updated January 2020. So it's quite recent, where you'll be able to see some of the top corporates that are offering ESD programs. Then you can obviously just dive into each corporate and find out what type of program or what type of support each company is giving. In terms of the service providers that are being used in implementing ESD services, unfortunately, no one has actually put together that list of the different types of providers that are implementing ESD programs for the corporates. So you would actually have to go into either Google or into LinkedIn. I mean, LinkedIn, I think, works quite well for SMMEs. If you just search SMME ESD managers, and I mean, ESD managers mustn't kill me, but search specific ESD managers, you'll get a list of all the ESD managers in the country and the corporate that they work for, and you'll be able to ask them the questions there, because then you can ask them with the direct email.
Titles, right? So they put in their
Yes, absolutely, absolutely. So stalk the ones on LinkedIn. They are there, their titles are there, the corporate that they work in are there, so you'll be able to ask directly your questions to the specific ESD managers or program managers.
All right, great stuff. Thank you for that. That's very useful. Let's move on to the Sonari ladies. I have a question for you guys that you probably didn't find a lot of time to get into detail on in your presentation, and maybe Mushmi, you can pick it up. And that's a question around mandates, because I know that not all VC firms or private equity firms, to the extent, of course, that they are investing investors' money and not their own money, and they are answerable to those investors, not all mandates are the same. Wouldn't that require entrepreneurs to really think through the kind of investor they want before they kind of let anybody into the door or into the opportunity of potentially investing?
Yeah, for sure. I definitely think it's worth researching your investor and understanding where they play. The last thing you want to do is sit and waste your time going down a road with an investor only to find out they don't invest in a particular sector or geography. So it is usually, you can find this information on their website, or just give them a quick call to say, please, can I have your mandate, and get as much information on your investor as possible.
Absolutely. Thanks for that, Mushmi. Let me bring in Sam. There's a question here from Mohao Ngondo. It's a very interesting question. She's asking, what is the principle to be adopted by entrepreneurs in attaining the right mix, she puts it in inverted commas, between equity and debt in your business? And then she closes by saying, do you always need debt in your business? That's an interesting one.
So the answer is most definitely no. In fact, there's very many circumstances where you definitely don't want debt in your business. So, you know, it's a great question. It speaks very much to the nature of the underlying business. Typically growth businesses, and many of the businesses that we invest in do have more of a growth nature to them, as opposed to a cash flow, stable cash flow profile. And those businesses, we would put only a small amount of debt in or no debt at all. But certainly the consideration for entrepreneurs is, you know, private equity or venture capital investment in your business is exceptionally expensive for you, right? So the trade-off around, so you may not want debt because it constrains the growth of your business, but then it will mean that you will have to suffer a dilution with new shareholders coming in. So that is why a lot of entrepreneurs, and again, it depends on what the nature of your underlying business is, will look first to whether there are debt alternatives that are effectively a lower cost than bringing in equity investors. And so it's a good old customary, almost corporate finance trade-off. Certainly in much larger businesses that have got lots of cash flow, if you don't have debt on your balance sheet, then it's considered a lazy balance sheet. Okay, it's not doing any hard lifting. So there's definitely different criteria, and it really relates to the underlying business.
Wow, great. Thank you so much for that, Sam. Grant and Precious, I'm back with you. Got a question from all the way from Richards Bay in KwaZulu-Natal. Zama wants to know, where can we all get, or where can we know all the companies that fund orders without interest? Now, the without interest part, I'm not even sure if that's possible, but I do know that FNB has products that fund orders or that fund purchase orders for guys who get contracts. Any guidance for Zama and Richards Bay?
Precious, do you want to go, or I can? I'm easy.
If Andile can please just repeat that question for us again.
So Zama wants to know where she can get funding for orders. She was hoping to get funding for orders at interest-free rates, but I doubt that's possible. But maybe there is, maybe you got something. But okay. How can you help her as FNB in funding her order? And maybe Kitu, when this is done, you might be able to assist on an ESD fund as well.
Perfect. I think as I alluded, Andile, earlier in my application, that provided that they have a valid purchase order and it is indeed from a reputable blue chip company or reputable government department, with the institutions that are in partnership with us to facilitate these type of transactions, we are then able to assist. This information is indeed available on our website. If you go to www.fnb.co.za, you click on For My Business and you click on Vumela. All of that information will be there and the steps are provided accordingly.
Thank you so much.
Andile, we actually don't charge interest on those transactions. Selective invoice discounting and purchase order finance, it's a percentage of the size of the invoice. So say she invoiced Mr. P as a business for 100,000 Rand. Let's say she's actually got the order and she's supplied already, then we'd do selective invoice discounting and we'd take a few percentage points, but it doesn't depend on how long it takes them to pay. So it's still a fee, but it's not interest.
Kitu, I guess you could also get some funding from corporates if you are part of their program and you are potentially getting those orders from them.
Definitely. I think especially where we talk about supplier development, easier for the corporate to fund your purchase orders. But what normally does frustrate the SMME, I must put it out there, is the timing of the funding, because also ESD funding is not quick funding. If you want quick funding, and normally purchase order funding, SMMEs are looking for that funding within a day, 3 days. And normally when it comes to ESD funding, the timelines are not as quick as it would be if you went to for commercial funding. But they definitely would be able to fund purchase order funding. And also, even if it's outside of the specific corporate's mandate, you'll probably be able to get purchase order funding from ESD if you are in the specific area or community that a certain corporate does support.
Great stuff. Ladies and gents, and majority ladies, which is always wonderful. Thank you so much for joining us this morning. We're going to have to pause it there. Please, can I ask all my panelists to respond to the questions on the Q&A? There's a lot of them that are there. You can feel free to answer any question. It doesn't necessarily have to be directly related to kind of your focus area, so that we can answer as many as possible. I've tried to go through as many of the one on the WhatsApp, and now we can deal with the ones on the Q&A on Zoom. Thank you once again, ladies. Now, it is now time for us to get to our guest entrepreneur for this time around, to be sung from 8 p.m. On the other side of the short break, we bring in the man himself who will share with us his journey. Okay, you clearly don't want to go on a break, no problem. Instead, what we will do is we'll go on a poll. Hey, I think it's about time we understand how you guys are feeling about this whole question of funding. So if the guys can put up the poll for us so that we can find out what the feeling is now that we've got all the information from everybody on the funding question. Post the live Q&A now that you've heard from the experts. Let me ask you this question again. Now I'm going to phrase it very differently. Which capital do you actually need? What kind of funding do you actually need in your business? Debt capital, equity capital, grant, or I don't need capital at all? Now that you've had the live Q&A, now that you've heard from the experts, what is the answer to the question I asked you in the beginning? Do you need debt capital? Pick it if you think if it's relevant to you. Equity capital, or a grant, or you don't need any capital at all. Let me know your thoughts. Right, let's see what the outcome is at this point, Keegan, so that we can see how people are feeling. Now they've got a little bit more information. Nay, the grant column has gone up. The grant column has gone up. Guys are looking for more grant funding, 46%. Debt capital has dropped 15%. Equity has also gone up 22%. So it looks like our businesses we don't feel they're at that point where we can go to a debt provider and that debt provider can give us real debt. Feels like we need a bit of equity coming from the equity capital or the grant capital. There's 17% of you, of course, who say they don't need capital at this stage. Speaking of capital, my guest entrepreneur is here. He's sitting all relaxed, chilled, laid back. You know, I don't picture bus owners relaxed in an office like you are, Tumi-san. How are you, my guy?
I'm well, thanks, Andile.
Is this what working from home looks like for you? Clearly, you're not at the factory.
COVID-19, that's all I can say.
COVID. Well, let's start the story at the beginning and we'll come to COVID-19. You've seen, and I know you've been paying attention to the whole session this morning. You've heard from the banks, you've heard from the ESD guys, you've heard from the VCs and the private equity funders, and you've heard the story of funding. And I guess what we didn't have today are the DFIs, all right? The IDCs and the NEFs, who are essentially with a social mandate, but very similar to the banks. In fact, some people will say at times even more punitive than the banks. You've had to build a business from scratch. For those who do not know, this gentleman here had a career in the space of logistics and very much in the thing that he does. And one day he decided to pursue his passion of creating his own business. And he had to go out there and find money. And we now have APM. Maybe very quickly, in less than a minute, what is the size of APM before COVID? What kind of a business was it before COVID?
We were essentially a business with about 260 employees, hovering at around 8% of the market, transporting about 35,000 people per month. So you fast forward to post-COVID, I mean, and other stuff that has happened in between COVID. So in the past 18 months, we've moved from a business that had about 264 employees to a business that currently has about 90 employees. We've seen our drop in revenue to the rate of about 35 or 40%, give or take. But it's been really tough. The only thing that I'm in control of, Andile, is controlling my costs. I mean, I say to whoever that cares to listen that, we are in the market where we do not create demand. We respond to demand, firstly. Secondly, it's a myth that we set prices. Prices for bus traveling are set by our passengers. So if a guy insists on paying 150, going to Durban from Johannesburg, he will find a service provider that will take his 150. I can want to charge 350 or whatever, but it does not work. So these are the issues that one needs to manage on a daily basis.
You are the perfect person to have the conversation about funding, particularly from the perspective of a real entrepreneur out there. You've had to raise money at the beginning of your business. You have now having to live through this pandemic. You have to raise money somehow, some way to keep going. Let's go to the beginning. When you came up with this idea of a bus company, going to people, trying to raise money, what are some of the lessons you can share from that stage that helped you become successful at raising money for a brand new venture? You are not buying an existing company. You are not coming up with, I don't know, drones of people jumping on drones and going to Devon. It was a bus company, you know? And a bus company, to many, is a bus company, So how were you successful at going to people and saying, give me the money?
It's all about credibility and experience. I mean, before starting APM, I was running Autopack City to City Translux. I'd been there for about 8 years. Prior to that, I had run Metro Rail. I had been involved in all of infrastructure improvement expenditure at PRASA. And prior to that, I did some time in the banking environment, worked as a lawyer, international lawyer. So I always say that APM is not a journey of overnight, I'm going to start a company. So what we tend to forget is that whatever you are doing today, you might be a teacher, but it all starts building up to your experience that ultimately at some point in the future, you are going to be able to do that. So for me, my background was and credibility, of course, that people can have their views about. But having worked in professional services and highly regulated environments such as legal services and banking, you are stickler to processes, to record keeping, to compliance. You know that there are no shortcuts in life. The second most important thing, my time at PRASA taught me operational aspects of transportation. That if you run an operational business, especially transport, there's a business that runs 24/7. You never get to rest because at any given point you have an asset on the road or on the rails. If I was talking about Metro Rail and Social Mail at the time, so you are carrying people's lives. So you need to be very important that whatever the train that leaves your train yard or the bus that leaves your depot can undertake that service and not bring harm to anyone. That is very important. So we fast forwarded to when we started APM. It was easy for me to get into that. At the time, we did not have a black-owned business of scale. I mean, the market was pretty much dominated by companies that had been around for a long time, mostly intergenerational white or Indian-owned businesses. And the real black competitor there was Autopack, which is government-owned. And what problems was I trying to solve? There was a particular operator that had tried and successfully managed to get into the market. But over time, they started being involved in too many accidents and they were on their downward spiral. And also the company that I led at the time, Autopack, was also starting to go on a downward spiral. So that's the opportunity that I saw in the market, that there's an opportunity for a new player to get in there. And because I also understood the cost structure of running transport businesses, I knew exactly what I was doing. It's interesting that my very first presentation, and if you don't mind, one of the commercial banks that I've seen had a mini fallout with over funding issues, is that when I did that presentation, within 5 minutes of that presentation, their transport sector specialist jumped up and said, can you please fund this, man? It's an opportunity. I've been waiting for someone to come and fill the space. And it seems that this APM guys know what they are doing, what they are talking about. There's a gap that they've identified. There's a problem that they need to solve. So for lesson 2...
but how unique was that problem, to be son? I'm sorry to interject. How unique was the problem that you were solving? Someone else who doesn't know the industry might go, it's a bus company. Buses go everywhere. I mean, what's so special about this one?
They showed at the time 2 things. I mean, you had the buses that were offering poor service. Generally, you had an industry that was and remains untransformed, where you did not have a black operator at the time. Black transport providers are limited to taxis, scholar transportation, and doing regional transportation between Limpopo, Gauteng, or the Eastern Cape and Gauteng. So we are the first black operator to say that we want to go big. Our dreams are also to operate in the same league as the likes of Greyhound, Intercape, and Translux, where we can have a central depot somewhere in Gauteng, then have programs all over the country. That's why within a space of 18 months when we were rolling out, we were able to build up to 14 sales offices throughout South Africa, even how we went about applying for operating license and permits. We made sure that each and every one of our coaches can or is licensed to undertake a service on any route in South Africa.
So you're saying so far it was the credibility, and then you touched on your experience of running order packs. You were able to go in there in front of any of the funders and put forward a credible case why you are a good jockey to back. And then it was the proposition. You had something that was competitive, something that was unique, and something that your funders felt is satisfying a space or a gap in the market. Did you have any cash of your own? Did you start literally from just nothing? And what do you think eventually pushed them over the line and convinced all of them? I mean, and I'm sure there was a mix of funders as well. It was some DFI and some commercial.
Yeah, two things. I mean, one cannot overestimate credibility, because even a DFI or a commercial funder, when I went and met with them for the first time, in terms of my experience from my previous engagement, was that I had run the largest bus company in South Africa, which was twice the size. I mean, Autopex employed over 1,600 employees. I had a fleet of 550 buses, and we had a turnover of almost R1 billion while we were still loss-making. But the big companies that had been around, I mean, I can use the Greyhounds of this world, the Intercapes of this world, were only running half of the fleet that we were running at Autopex. So, I mean, I said at the sound of risk sounding very arrogant about it, and I said that I ran the largest bus company in South Africa, and there's nothing that I've not experienced. I mean, from taxi wars, having bought that company out of Transnet into Prasa, having capitalized that company from the tune of about 1.1 billion rand. This was leading to the 2010 World Cup. So I had practical experience in that respect. Yeah. The second one, the 2 years that I spent in the banking environment, is that I understood the credit process in banks. Is that I even most of the time, tongue in cheek, I offered to write a credit paper and said, no, I can write a credit paper for you because I know exactly what needs to go into a credit paper. So the connect between a wannabe entrepreneur is that you've got you're a banker who has very limited knowledge of your business, and this is a guy that essentially becomes your ambassador or your representative inside the bank. He's a guy that's going to stand in front of the of the credit committee. So if the guy does not have the passion for your business, or is just doing that thing just because they get paid at the end of the month, it's just doing their normal work and whatever, you are not going to get that funding. So it's something that I can tell you, Andila, that after each meeting, I'll have a sense of whether I'll be able to get funding or not from that particular band. That's why I was excited with the first meeting that I had. I think at the time I was with a certain lady, Kathy Bell from Standard Bank, that she was so excited about APM and about what we wanted to do that she said, I'm going to make sure that you guys get this funding. So it's a combination of those two things. Again, it boils down to experience. Then the same experience and credibility, that's why I was able to raise what I call private money, pull from friends, family and everything. I mean, we raised about, to date, about 22 million. This was a money that was raised from
friends and family. You've got really nice friends and family, my friend.
Yeah, I mean, you had the guys chipping in. I think at the time, I mean, we said that the minimum investment of 250. As the most interesting one is that we had some guys, about 5 of them, that each chipped in 50,000 to get to 250,000. That's how they came to this thing. Then obviously we had the wealthier guys that could do $1 million here, 2 million here. So that's how we were quickly able to also put some.
Whoa. Rewind. How did you do that? I mean, it can't be easy to go and ask your family and friends for money. I mean, I don't have to remind you, you're black like me, so it's not the easiest thing to do. How were you able to do this?
Again, this was my experience. These are the guys that I worked with previously in my banking career, in my legal career, and also elsewhere. And the guys were essentially saying that, no, to me, Sam, you are not that type that the following day you'll be chasing a deal in the mining, or you want to supply PPE, because you are focused. You've proven yourself that you are a transport person through and through, and you are passionate about this thing. Is that we want to beg you. And the guys even today tell me that we know that our money is might be at risk, but we are proud at the fact that we've backed a successful black-owned transport company.
Wow. Okay, ladies and gentlemen, the question and answers are open. The lines are open on WhatsApp. You've got the number for WhatsApp. It's on your screen. On the Q&A, it's at the bottom of your screen. Please throw in any questions you might have for Dumisang. I will make sure I put it to him before we wrap up in about 15 minutes time with him as he shares the journey. Dumisang, you touched on something a few times now, and that is about your credibility, your experience, and how when you went to people, whether it was the bank, or the first time you went there and the few times you went there, or it was the family and friends, everybody spoke about the fact that you were focused on this thing, you're committed, and you had the experience. And then you said something. You said, at the risk of sounding cocky or at the risk of sounding, overly confident. Do you think we struggle with that? Do you think entrepreneurs struggle with the ability to sell themselves openly and honestly without feeling like, they're being pompous or they're being too cocky? Do you think it's a problem?
It's a problem because we always want to come across, we don't want to rub people the wrong way. We don't want to step on people's toes. Interestingly, Andile, I was on a long call last week with one of our major funders, one of the DFIs. And at the end of that meeting, I was accused of being a bully because of how I came across. And the issue for me is that, there's this claim, tell no lies, claim no easy victories and everything. Is that you tell a guy that 1 + 1 is 2. 1 + 1 can never be 3. And it goes back to the fundamentals of the business that I'm running, that APM, when it started 5 years ago, the GDP was much, much better than what it is today. We were able to generate twice the revenue that we're generating today. The circumstances, the macroeconomic environment enable us to do those things. 5 years later, things have moved. I mean, when Mr. Mauleka Rasinga, the Statistician General, says that the GDP has contracted by 51%, what that means for me is that, I always use this measure of labor participation rate, meaning the number of people that are employed. That if the economy employs fewer people, it means that there's fewer or less money to go around, which the sector that is always the first to feel any movement in the economy is transportation. Obviously people commute to work using commuter buses, or people commuting long distances during holidays or on weekends to go for family engagement. So if they do not have money, if there's not enough money in the system, they don't do those things. And I say to the guys that, guys, you can say whatever you want to say, that the fact that the businesses is not doing well or is missing its targets is got very little to do with what's happening now inside the business, but what's happening in the macroeconomic environment. And the most difficult people to deal with, you'll excuse me, are commercial banks. They don't get it, and they will never get it. And I can tell you that even if, with our capital structure, 70% of our funding comes from the DFIs. 10% will be from our shareholders. 10% will be from our supplier trade. Only 10% comes from commercial banks. And commercial banks, and with all respect to them, they are the guys that will tell you that they've got certain internal credit processes. The guys will tell you that before we fund you, we want your 3 years of AFS's, annual financial statements. Obviously, for any startup, a business that you start from a zero base with your own cash, is that it takes up to 6 or 7 years for it to be profitable. So the AFSs don't mean anything. And I always say that, you can have them, but they are telling a story. The only story that you can extract from a financial statement is that you just see a business growing from a zero base. The fact that I've accumulated losses of X it's not neither here nor there. We need to start funding business on the basis of potential going forward and what the economy needs.
But right now, you're talking about the economy, you talk about the macros. COVID-19 is upon us. Our economy pretty much went on shutdown for the past 6 months. You are running a business that's got employees. You've had to retrench employees. You've had to cease your operations because frankly, you couldn't travel. Now it's China started to come back. I'm an entrepreneur. I'm listening to this man. I want to learn how he's managing his funding plan, how he's managing his own balance sheet right now. How are you doing it? How are you managing the funders that, one, expect to be paid, and then two, you also may very well need working capital from them?
It's the most difficult thing, without putting fear of God into everyone, is that the current environment in South Africa is not really conducive for entrepreneurship. is that the access to funding on paper is very simple. I mean, I've listened to the bank representatives telling you about this and that, and we heard about this much celebrated COVID-19 term loan relief scheme backed by National Treasury, and even the shocking figures that less than 15% uptake relating to that one. So our approach has been very simple. That I mean, as a practical example, is that about 3 months ago, before COVID, the cost of my depot in Pretoria was at around 300,000. So I've had to downsize from a 300,000 rand a month depot to a 50,000 rand a month depot because I'm trying to control costs. I've had to cut a whole lot of allowances that I pay to staff so that I can contain costs. And Andile, it's interesting that what I've been able to achieve is that we've got a business that's very much sustainable now, that generates enough on a monthly basis to cover the OPEX and also to service the current liabilities. So the issue relates to the arrear or the historical debt that you've accumulated, because during that time you've accumulated those losses, that amount of debt, because the market shifted in the intervening period. So the discussion that I'm having with the funders, and that's where you get accused again of being a bit the boss. You tell them that, you know, the world has moved. There's no way that this thing can happen. Big companies always get extended the cases of having debt restructuring, debt write-offs, debt forgiveness and everything. That the same thing that where most white businesses have benefited, and they are, and most of the JC companies, by the way, have at some stage, even what's happening at Con, the fact that everyone can go and chip in and make sure that they save this company, is that why are you not applying the same thing to black companies? The fact that I'm unknown and this, that I also deserve a debt restructuring that makes sure that I trade through out of the circumstances, and in the next 3 to 4 years, I start again growing and creating additional employment. So I'm heartened that, you know, guys like SARS understand that they are willing to compromise in terms of what you owe them. Some of the smaller suppliers understand that, but the commercial banks are having none of that. The only thing that they want is give us a debt repayment plan. And we're not interested in that. Is that the past is the past. You know, this thing has happened, but we need to support each other to make sure that as a country, we're able to trade out of this thing. We start addressing this terrible GDP figures.
So what do? I'm an entrepreneur, just like you. My business might be much smaller than yours. So we have the same problems, but maybe yours has more zeros than me. I'm also going through that difficulty right now. Exactly your challenges, but you are a more experienced leader than I am. I want to learn from Tumisang. What do? What does Tumisang say I can do in these difficult times?
Most importantly, I mean, I've mentioned experience. I've mentioned the fact that there has to be a particular gap or a space that you are feeling. In fact, I've got a very good friend, but she's in the pharmaceuticals, beauty things, Theo Motor. She started a product called Uso. Is that she saw a need at the time, the gap at the time was that you do not have a reputable, you know, a black skin care. This is the gap that she's trying to fill. So I cannot overemphasize this. Do not start a business for the sake of starting a business. There has to be a particular need that you are feeling. If you get that 50% of your problems are solved, then the second thing is that you need to don't rely too much. I know people believe in advisors. Don't rely too much on advisors and outsource everything to them. You need to be able to walk into a boardroom and talk about the operations of your business, talk about the balance sheet of your business, talk about the focus. You need to have a knowledge of your business. Then most importantly, I think the prospects and delay for funding for black businesses going forward, it's not great with the commercial banks. My view is that the DFIs, in fact, are much more better placed to work with black-owned SMMEs. I've been spending a lot of time with the NEF and CIFA. And these guys finally, I know it's been very frustrating working with them for the past 5 years, but they've finally starting to see the light. That it's not we cannot apply the same standards that commercial banks apply. We'll never get anywhere. So we need to, again, you know, if you get your story straight, then approach the DFIs that are much more better suited to supporting you than commercial banks.
All right, but why do you think they are? Or why do you think the banks are less suited?
It's their mandate. At the end of the day, the guys will tell you about the certain conventions that govern the banks. And they'll tell you that their credit criteria is that if a business is technically insolvent, you don't qualify for any funding. If a business does not meet certain criteria, and Andy, I mean, let's. And
the DFIs don't. The DFIs don't tell
no,
you.
they tend to be more understanding. They tend to embrace. In fact, something that I've seen over the past couple of months, having worked or been working this journey with them, that the DFIs have. In fact, we even have a great minister in the Minister of SMM is Kumbuzo Ntshabeni, that she also sees this and that, you know, not a business that is not profitable from day one. So the classical test that most commercial banks do is that they need you to be profitable from day one before they can fund you. So if your business has been showing some losses, and I had this thing that, you know, one of the panelists using an analogy of your conduct. The reality with bus business is that we are only profitable 3 months out of 12. So the other 9 months we are loss making, we miss on our installments and everything. So no bus company will ever have a good credit record within commercial banks. So based on that, I do not qualify for any funding. Bus companies only make their money during Easter, June, July school holidays, and December. The rest of the year, we are bleeding. We are just, it's a battle to stay afloat. So imagine now having to go into a bank and with those figures trying to get any funding. You are not going to get it.
All right, I hear you loud and clear. Let me ask Ronald Oliver's question here. He's saying, are you an esteemed investor in other businesses like your friends did in yours earlier on? Your confidence is a very strong attribute, which makes listening to your story very satisfying. I think Ronald is trying to get some money out of you here, Dumisa.
Unfortunately, one thing that I've learned, which should be a lesson to an entrepreneur, especially if you're still in your early stages of business, that try and focus on one thing. The reason why I'm not a investor in other businesses, apart from the fact that I don't have the cash, is that, you know, what I'm trying to do requires literally 100% of my attention. Our business, as you can tell, Andila, is that apart from running a 24/7 operation, is that half of the time you are dealing with unhappy suppliers, you are dealing with banks that want to repossess their vehicles because you've skipped about 3 or 4 installments. So again, going to this thing, I mean, I'm very passionate about where this thing is going, that if I had my way, I'll get all the commercial banks out of APM and only have DFIs as the guys supporting the business, because they get it. Commercial banks will never get it.
Strong words from Mr. Tumisang. Mr. Khawasela, thank you so much for your time, my brother. I truly appreciate it, and good luck with the business. May it make tons of profit in those 3 months so that, you know, you can make up for the other bleeding months. I really appreciate your time and your very frank input in this topic around funding.
No, thanks, Andy. I mean, what I always say to the guys is that the SAPM, we dare not fail. We are doing something that's never been done in South Africa. So if APM fails, is that it will set back what an average black child wants to achieve in South Africa. Is that we are proving a point that this can be done. It's still possible to start a business from a zero base to take it to a multi-million rand enterprise.
Great stuff. Thank you so much, ladies and gents. That was Mr. Tumisang Khawasela from APM. Well, that brings us to the end of the show. Thank you so much. But before we wrap up, Lita from Three Stick Men has our minutes for the meeting we just had. And of course, her minutes are a lot more creative than any other minutes you've ever seen before. Lita.
Excellent. Thank you, Andile. Let me share my screen with you and I'll take you through the summary. You should see it appearing in a moment or so. All right, so here with the 3-minute graphic summary. We spoke about the fact that banks lend other people's deposits. They have a responsibility to protect all the parties involved. We spoke about the fact that a business has different needs at the different cycle of the business. Means of funding could be friends, family, other institutions. But what is really important is that the banks look at risk. Startups usually have quite a high risk. And we spoke about the fact that you have to have a look at the history of your company. How active is your account? Do you pay your debts? What is the affordability? And what is the security, the collateral that you can pick up? Very important, keep those records and keep your personal stuff separate from the business stuff. There's a couple of different loans that you can look at: business loans, credit cards, commercial property, POs, invoice discounting. And what I thought was really important is for the next crisis, and it's going to come, ensure that you keep great records. CIPC registrations, this is some of the stuff that FNB can offer, first business zero accounts, and you can read the rest. And if you need help, go onto the FNB app and look at Fundaba as well, specifically for SMMEs. Then we spoke about enterprise supply development. Ketumetse took us through that. It came from the BEE codes of good practice. There are 3 different types of companies that you can look at. And really the purpose is threefold: to promote economic transformation, to create competitive markets, and then thirdly, to create jobs and sustain communities. One job feeds 10 people. A couple of things that you can access: grants, there's loans, there's training, there's office support, and there's management support. How you can access it, and I thought this was really interesting. First of all, ask your network, clarify what is your funding strategy, what are the types of loans that's available, and ask if you don't know, what is the amount that you need to loan or the amount that you need as a grant? What is the benefit? What are the jobs that you're going to create? And look at those procurement opportunities. Look for the win-win in which you can become part of the supply chain for the people that give you the loan. And finally, look at the geographic reach. Where are you operating? Very, very important, have a good company profile. Make sure that it's clear, that it's simple, and that you've included everything that you need to include. And we can have a look at the detail there. And then Samantha and Mushmi took us through different investments, the business cycle growth. Your investors look at different things at different times, different risk. What is equally important is that you and your investor work together. And evaluation goes both ways. They evaluate you, but you should be evaluating them as well. Look at purpose, look at fit, look at value. And again, those complete, reliable financials coming through, again, make sure that you have them updated. It will give you a shorter turnaround time. Specifically, I want to quickly go through this, the do's and the don'ts. Don't build a prison. Don't be reliable on one person. Have the courageous conversations immediately. Don't wait for later. Set yourself up to success. She spoke about back to the cave versus transformation, and then create that roadmap to boring. Sustainability, scalability, saleability, that's what they're looking for. And an advisor can add huge value to you. Then we went into the panel discussion. We spoke about the fact that banks don't always need security, and mistakes are not forever. Research your investment or your investor. You don't always need debt in the business. It's dependent on the type of business. Look at the SMME website for the corporate ESG information available. Go and troll people on LinkedIn. And we had a particular question around funding POs interest-free. You can see the information there on the FNB website. And then finally, Tumisang took us through his story. I think what came through for me here is that credibility and experience, especially in the industry that you're in, is absolutely critical. Focus on solving a problem. Make sure that your proposition is really clear. Don't sell yourself short. Don't worry about coming across as arrogant. Just be honest. And maybe then focus on one thing. Don't dilute your focus too much. We also got the results of the polls over here, poll number 1 and poll number 2, and you can see how they've changed from the one to the other. And that, Andile, is the 3-minute summary. We will be sending this graphic through to everyone who's attended today, so you can look out for that in your inbox. And Andile, over to you.
Thank you very much, my friend. Thank you very much, Lita. Impressive set of minutes. I bet you've never seen minutes like that before. Yes, indeed. Like Lita says, you'll be getting that in your emails. We also have a winner for our book. Yes, the book competition on social media. Our winner is Siyabulela Ndungane. He is the winner of this particular competition. He's from Durban, from what I can tell, and he's a salesman. I'm lying, his name is not Siyabulela. Sinaye, sorry, Baba. Sinaye Ndungane on Twitter is the big winner of the competition. Sinaye, the book is coming your way. Please make sure that you read it and enjoy it indeed. For everyone else, thank you so much for joining us. You'll be getting a lot of emails, including the feedback. The link is about to pop up on your screen for you to give us any feedback from today. For those that are on the WhatsApp line, if you would like any of the information that we are sending out an email, just WhatsApp us your email address. We'll make sure now you get all the nice things that everyone else is getting and continue to be a part of us. 17th of October, rather, is the next date. That is when the next I'm an Entrepreneur Digital Summit will be taking place. Please diarize and look out on your social media platforms for the announcement of the theme and also the people that will be participating at it. Do not miss it. Everybody else, if you need any more information, info@imanentrepreneur.co.za, info@imanentrepreneur.co.za is the email to send through to us if you have any feedback, any questions, anything you might need at all. The ladies in the office will take care of it for you. Thank you so much to everybody for joining us today. It was our first 2-hour special, and I hope you found it as useful as I did. I will catch you again on the 17th of October. Take care.
This has been the I'm an Entrepreneur Digital Summit in association with FNB and our partners.
So does your bank help?
Get my startup off the ground? FNB does.
Oh, okay.
With the first Business Zero account.
But you've got a job.
Office hours pay for my after hours.
Ah, you mean side hustle?
No, my business. And that's why I have a business account that has 0 monthly account fee. All my swipes are free. Plus, I get data from FNB too.
Wow.
Wow is getting paid anyway.
Worth that hustle.
I told you, it's not a hustle. It's a business. And that's why I'm the business bank.
Okay, I hear you. Does your bank help you start your business like that?
Mine does.